That's one thing that I'm furious about is the current corporate tax structure and the regulatory makeup of our state and city. You know, I don't know if people really necessarily realize how many business opportunities that we've lost over the last few years.
Well, just looking at last year, we lost a battery plant, we lost an electric car plant.
That's
all
correct.
These other things,
And well, you know, and Humana just lost $21 billion worth of business for as losing to TRICARE.
Jobs are gone. Yeah.
And here I'll give you a perfect example about how the makeup is, and I think this will explain it a little bit. Medco came in here, and which was Medco Health Systems, which is a pharmaceutical distribution. Mm-hmm. They would have had 1,300 high-paying jobs. The finalists was the city of Louisville and Indianapolis. Well, Indianapolis ended up winning the bid. Now, let me break down a little particulars about what happened and why we lost that bid. All right, number one is that the state of Kentucky offered $30 million in tax incentives to Medco. Indiana offered $18 million in tax incentives to Medco. All right? Seems good, right?
Yeah.
Because Kentucky had in the advantage, you would think. Well, there's another side of it is with the regulatory issues. Now, Medco, because they're dealing in pharmaceutical products, there were certain laws that exist within the state. Now, what Indiana ended up doing is that they had an expedited means to move certain issues through the regulatory commission, so they eliminated bureaucracy so they could make a quick decision in the state when they need to do it.
So they had a board or something that would meet right away instead of waiting for a general session or something like that.
And then they would, of course, they would have to go to the general session for approval.
Sure.
Well, what happens in the state of Kentucky is this. The bureaucracy stood in the way, and it was a slow process, and we weren't able to meet the needs of Medco. So, and then the other side of it is that if we're given $30 million in tax incentives, basically what that means is, and I'll quote this guy. This is a guy, his name is Michael Hicks. He's the director of the Bureau of Business Research for Ball State University, and he quotes, "Once the state's given away big chunks of tax incentives, that's a good indicator that the overall tax climate is broken." and I believe that. And it shows that if we have to give away huge chunks of tax incentives, something is definitely wrong.